Hello and welcome to Markets View at Deven Choksey, the daily market podcast where we decode the Indian financial markets. We are starting a fresh week and understanding the global markets, and of course, as always, we start with the GIFT Nifty, which is trading higher this morning, indicating a gap up start for the Indian markets. The US futures are higher after cash market ended in the red on Friday. However, the US market ended lower. Nasdaq was down around 1%. Dow and S&P also did fall to around 0.5% each. If we talk about the Asian markets have opened up mixed, where Nikkei was down around 0.4% and Kospi is up around 1%. Coming back to the economic indicative actions, in the US market, the US key indices snapped a 5-week winning streak where S&P 500 did fall around 0.4% for the week. The US January PPI is seen at 0.3% on a month-on-month basis versus estimate of 0.1%. The US 10-year yield did rise near 4.3% following stronger than estimated PPI reading. If we talk about the bullion market, the crude pack, energy pack, the crude is posting weekly gains where Brent is currently steady near $83 a barrel amid geopolitical tension. The dollar index is edging higher against basket of currencies above 104 mark. So this is how the global setup looks like. The US market did close on a lower trend in the Friday trading session. The GIFT Nifty has given a positive start and the Asian markets have opened up mixed. Let us now take a look at the trade setup for today. We are starting a new week, and if we take the cues from what happened in the last trading session, of course the market maintained an upward journey for 4 days in a row as bulls gained strength and brought the Nifty 50 very close to its previous record high of 22,127. Most of the experts expect the index to surpass the said record high in the coming sessions with resistance at 22,200 to 22,300 area despite consolidation. However, there was a kind of spinning top formation on 16th of February which has less significance at current levels. As we clearly see, 21,900 to 21,950 is likely to be an immediate support for the index, followed by 21,750. In the last trading session, the Sensex was up around 376 points to close at 72,427, while the Nifty rallied around 130 points to close at 22,041. A small positive candle was formed on the daily chart with gap up opening and with minor upper and lower shadows. Technically, this pattern indicates a formation of spinning top type candle pattern at the highs, which are normally associated with top reversals. But having formed this pattern after a minor up move and the formation within a broader high-low range movement, this predictive value, if we take a look, and this predictive value of this pattern could be less. However, we feel though that Nifty is placed near the crucial overhead resistance of 22,125 level, there is still no indication of any significant reversal pattern building at the highs. Hence, there is a possibility of some more upside towards the new all-time high of around 22,150 level before showing any selling pressure from the new highs. The immediate support is at 21,920 levels. For Nifty particularly, the price has also consistently closed above the 21-day EMA for the last few sessions, indicating a positive trend. On the daily charts, Nifty has been trading in a bullish ascending triangle pattern. In the short term, the index can move towards 22,200 and the move above it can take it to 22,600. Support on the lower end is placed at 21,750. Considering all of these, let's now take a look at the key support and resistance areas for both Nifty and Bank Nifty. Nifty is likely to take immediate support at 21,988, followed by 21,964 and 21,926 levels, while on the higher side it may see immediate resistance at 22,050, followed by 22,088 and 22,128 levels. Meanwhile, in the last trading session, Bank Nifty bulls also remained strong, keeping the index above 46,000 mark. The banking index closed with 46,385, up 166 points, and of course formed a small bearish candlestick pattern with long upper shadow on the daily charts as the closing was lower than opening levels. Despite facing minor rejections at the immediate hurdle of 46,700, the overall undertone remains bullish. Any dips are seen as buying opportunities, especially with strong support identified in the 46,000 to 45,800 zone. The index, once it surpasses the hurdle of 46,700 on the closing basis, is anticipated to open up further room for an upward move towards 48,000 mark. For Bank Nifty, it is expected to take support at 46,284, followed by 46,182 and 46,019 levels, while on the higher side, the index may see resistance at 46,424, followed by 46,713 and 46,877 levels. So these are all the important support and resistance levels for both Nifty and Bank Nifty. Let's now take a look at the stock-specific action, which will be in focus for the trading session today. A few numbers as we see CIE Automotive India will be in focus ahead of December quarter earnings on the 19th of February. The other stocks in news is we start with Life Insurance Corporation of India, as the corporation has received refunds order for assessment year 2020, 2012, 2013, 2013, 2014, 2014, 2015, 16, 17, 17, 18, 18, 19 and 19, 20. The Income Tax Department has released rupees 21,741 crore on the 15th of February. JP Petroleum will be in focus as the company has entered into a distributorship agreement with New Trading Bangladesh. Omex is another stock which one needs to consider. The company has been declared as a successful bidder by Uttar Pradesh State Road Transport Corporation for the development of 2 bus terminals at the cost of 385 crore. The next stock in focus would be Tata Power, as the Tata Group company has received letter of intent from REC Power Development and Consultancy to acquire Jalpura Khurja Power Transmission, a project special purpose vehicle for 838 crore. And last but not the least, the state-owned telecom manufacturing company ITI Limited will be in focus, as it has signed an MOU, Memorandum of Understanding, with J&K Operations for manufacturing and providing the Bharos-enabled digital device and services. So these are all the important stocks in news. Let's now take a look at the FIs and DIs data. The foreign institutional investors net bought shares worth rupees 253 crore, while the domestic institutional investors purchased shares worth rupees 1,571 crore on the 16th of February. So this is how the trade setup for today's trading session looks like. It's a fresh start to the week. Let's anticipate and expect a good action in the market. However, as we constantly say, no matter what the market conditions are, irrespective of those conditions, research is the backbone of successful portfolio creation. Wealth creation is an art that we understand. We at Deven Choksey have our exclusive research services which are powerful and successful. To avail our exclusive research services, we invite you to join us. Just click on the link below and you're done. Fill in your basic details and our team will reach out to you. So don't wait any further and embark on a wealth building adventure together. Thank you and have a nice day.